Good afternoon, Fort McMurray. Melanie, Galea here with Remax Fort McMurray, and I am with my co-host of Let's Talk Lending. I am with
Barb Pinsent of the Mortgage Center We Connect.
Awesome. All right, Miss Barb. We get together like once a month so that we can chat about what's going on in the market, so that we can see what's going on. And it's not just the market. It really is, we get together because the Bank of Canada rate once 8 times a year?
8 times a year.
8 times a year comes up with what they're going to do with the interest rates, like the benchmark, the Bank of Canada rate. So what happened?
Yeah, the same thing happened again this time as has happened for, I think, the last 5 times. No change, which was fully expected because there's only so low they can go, and they don't want to go any lower than that 0.25% that it's currently at. So no change.
Gotcha.
Yeah.
Okay, and that's not necessarily a bad thing because it means interest rates are staying the same, which is fantastic.
Variable rates staying the same because the bench or the this meeting is in relation to the variable rate. So if you had a variable rate mortgage, your rate is not gone up, will not go up. If you have a revolving, like a line of credit, those type things, rates haven't changed on those.
Right. And so I think, the other reason that we started doing this is because we want to go more detailed, to provide information to give future buyers. You need to know what you're looking for, what you need from a mortgage, because there's lots of different mortgages, and it is absolutely vitally important. Now, especially with COVID and there's more restrictions, you're going out looking. Sellers do not want you in their house unless you've been not just pre-approved, but pre-qualified. Yeah. So Barb, can we talk about that? Let's go deep today. Because I think today you wanted to talk about the lenders and the differences.
I did. And that pre-approval is so important because you do want to know where you stand with your finances. So meet with someone, have them look at your credit, have them look at what you've got in place for a down payment, talk to you about debt servicing, because all of that can be looked at before you go out shopping so that you know where it is that you stand. Not always are you going to be, it's not always a green light. It's not always a slam dunk. But certainly, at least you've had the conversation and you know where you stand. If there are some bumps, then you're aware of those. Your agent is aware of those so that everybody knows where one stands, which is really important. Yeah, and the benefit, I think, to working with someone like myself who has access to more than one lender. Lenders do have different criteria, different policies, different guidelines. Sometimes they're bound by the insurer guidelines. So if you're putting less than that 20% down on a purchase, then not only do you have to meet the lender's criteria, but you got to meet the insurer's criteria as well. So, sometimes first-time home buyers with that minimum down payment or less than 20%, there's not a lot of difference really in what one lender will do over the other. However, different things are looked at differently. So, some lenders will let you use housing allowance if it shows on a pay stub and not show in a job letter. Some lenders won't let you use it if it's not reporting in the job letter. So just different things that we can work with, knowing when we start the process, I know where something might fit. Sometimes it's a slam dunk and it can go with any lender, but those are not, I wouldn't say the norm, but there's lots out there that don't fit all the boxes. And so then we work with what we have to try and get that mortgage approved or done for the client so that at the end of the day.
Let's talk about some of those different lenders. Okay. So I've got that slide up that you sent me, and why don't you go through that for us?
Okay, so I do work with some banks, credit unions, monoline lenders. The monoline lender is a lender who does nothing but mortgages. So they don't have a storefront like a bank does. You're not going to walk up to the door and walk into the branch, but been in business in Canada for many, many years, reputable. So not anybody that you have to worry about. B lenders are lenders that they do different type financing, and the loan to value for B lenders is a little bit different than, they might make exceptions that an A lender won't. And an A lender is a lender who's, you're meeting all of the criteria, your credit score is good, your beacons or your debt servicing is okay, you're checking off all of the boxes. And if that's the case, then we can put your application or send your file to an A lender. B lenders work around some of those issues. Private lenders even more so, but the private lenders and B lenders, rates are going to be higher. The loan to value is going to be different. So you're not going to go to a B lender or a private lender if you only have 5% to put down, but still, they do their thing, and they're wonderful and fit some clients' criteria, and not all, of course. And so for banks, TD and Scotiabank I work with, credit union, ATB Financial, some of the monoline lenders, and I won't go through here, but you can see them on the screen. These are some of the lenders that I work with. There are others out there, but some lenders don't necessarily, lend in Fort McMurray maybe, or, area matters as well, and not just Fort McMurray. There are other places too that maybe some lenders don't go into, but some of the lenders that I work with fairly frequently, you'll see on the list here.
Okay, cool. All right, so let's go to, you want to talk about the file types next?
Yeah, yep.
Okay.
And so there are different file types. So again, like an A insured file is going to go to a lender who, your file, if you're A insured, you're putting less than 80% down. You aren't going over that $1 million, so the $999,999. Purchase price not going to be higher than that. You've got a beacon score of at least 600, and I say 600. Insurers will look at 600, some lenders won't, and typically, they want to see 650 probably is what most lenders want to see. They will look at files that don't have a beacon score of that 650, but so that's your A file. A conventional file, again, good credit, income is verifiable. It's a good looking file. You're putting 20% or more down on your purchase. Insurable is a little bit different. I still get confused by all these different type files now, but an insurable file is the lender will pay for the insurance fee as long as your file meets certain criteria. So you're not having to pay that insurance premium. The lender's still getting that insurance from the insurer. B files are for files whose credit scores are not 600. So you might have a file, that's under the 600. Sometimes a B file, you might have a higher credit score than that 600, but those type files might be files that go to a B lender. Private files, again, those are short-term, you hope, type mortgages where, your credit might not be may not be stellar. There might be some issues with verifying income. Debt servicing might be a little bit higher than the allowable guidelines. So lots of different type files there, and ergo why it's great that there are so many different type lenders out there as well.
Awesome. Okay, so the next is the criteria.
Yeah, and so we're always looking at criteria. Important, needs to be made, needs to be met. Yeah, anyway, that's the big one for the day. So your TDS and GDS. So if it's an A file, most, A files, your GDS and TDS are determined by your credit score. So if you have a credit score.
Can we speak English here? What is TDS and GDS? What's that mean?
Oh, I shouldn't do that. TDS is your total debt servicing. So that's all of the credit obligations, monthly credit obligations that you have, plus your housing costs. So it's going to include the mortgage payment, property taxes, condo fees, if applicable. And we also have to use something for heating. And heating is determined by square footage. So GDS is your gross debt servicing, and that's your housing costs. So your mortgage payment, property taxes, condo fees, and heating. And there's maximums that can't be exceeded. And that's for an A file. So if your credit score is 680 or higher, your total debt servicing, so TDS, can go to 44% of your gross income. GDS can't exceed 39% of your gross income. If your credit score is less than that 680, then you might be looking at 42% total debt servicing and 35% gross debt servicing. So, you know, important to do what you can to make sure that your credit history is maintained. Keep the balances down on any revolving credit that you have, because that can make a big difference to your credit score. The down payment is something else that's looked at when we're doing a mortgage, and there's different sources of down payment. So typically it's money that you've saved, whether that's, you know, money that you have going into a savings account regularly, RRSPs, tax-free savings, investments, those type instruments. There are mortgages out there where you can borrow for the down payment. Not as many lenders that participate in that program, but it is available. So, you know, if you meet the criteria and you're able to find the down payment, so if you have a line of credit that you have access to the limit on, or if you don't, you know, go to your bank to see if you can qualify for a loan or the line of credit, and funds from that can be used for the down payment. It's not a bad program, but it's not one that you want to enter into if you're, you know, not going to be in a position maybe to pay that money off sooner rather than later. Because, you know, as a first-time home buyer, do you want to go into a new mortgage and now you've also got a line of credit or a loan payment that you got to make in addition to that? So, you know, something to be mindful of before you get into something like that.
Gotcha.
Yeah.
Okay, so we've gone over all those there, and so I think, you know, you need someone to help guide you along the way. What I'm just realizing, and not just realizing, but it's like very apparent from what you've just shared with us. There's so many different steps to getting a mortgage. You know, the fun part looking for the house is looking for the house, but you got to be prepared, right?
Yeah, you do.
The best thing you can do for yourself is to reach out to Barb, reach out to myself. You know, one of the things we have is the letstalklending.com gets you connected to both of us. You need to be educated. You need to be educated on, like, my job is to educate you on what's going on in the market, how to pay, you know, the lowest amount of dollar for, you know, for property that you're looking to purchase. And Barb's job is to, you know, both our jobs is to keep as much money in your pocket as possible. And the best way she can do that and to help you and to decrease the stress, because it is stressful. You know,
it is. Yeah, it definitely is.
Right? Like waiting for the financing. There's so many pieces, so many moving parts to purchasing property. We want you to be ready.
Yeah,
right. And
absolutely.
so that's why I think the best way to be ready is to get a hold of us. If you have questions about the market, I'm happy to answer those questions. Barb is a rock star, right? If Barb can't get it done, it can't be done. Is pretty much what I say.
Yeah. She tries. She tries really hard. There are times when maybe something can happen somewhere else. I'm not going to say that, but I do my darndest for sure to get it done.
Yeah, absolutely.
Yeah.
Okay, so Barb, we're going to keep doing this next year. I think it's incredibly helpful to people that are looking for a home, to be educated, to be ready to go. And you might not be looking for a few months from now. Still have the conversation with Barb now, you know, and Barb, you can help people get ready. Like, maybe they're not ready for 6 months or a year from now, but the conversation now might be a good idea, so that you can help them get set up. Maybe teach them how to save, you know, or things that they need to look at their credit score, or like just really get themselves prepared to raise their credit score over the next year.
Absolutely.
Maybe that should be one of our, you know what, Barb, I think that should be one of the episodes, right? Like one of the episodes is how to raise your credit score.
Yeah, for sure.
I think that's a great topic.
Yeah.
All right. Okay, Barb, anything else you want to leave people with? I'm just going to leave 2 notes after what you got?
Yeah, nothing for me other than, of course, we always talk about, reaching out. So if you've got questions, and I'm happy to answer questions, I'm not here just for the paycheck. I'm here because I love doing what I'm doing. I love to see people succeed, and whether it's with me that you're finding that success or someone else, I don't care. But I am here and happy to help in any way that I can.
Awesome. So I think what we're also both saying is like, thank you to our clients this year. Thank you to everyone who's put their trust and faith into us. I know how much we really appreciate it.
Yeah, for sure. Yeah. And that's.
Thanks, oh, sorry. Go ahead, Barb.
I just feel blessed really for, to be able to do what it is that I do and to help the people that I do. And I've met so many fabulous people, and it's just a blessing really that I do what I do and love. I just love what I do. And I thank everybody for making it possible.
Awesome. One of the comments here was, would love to see a video on credit score. So that's awesome. Yeah. So we definitely need to do that in the new year. Yeah. So McMurray, we've had some changes this year. We've had with COVID, please shop locally as much as you possibly can. This year, discover Fort McMurray. If you haven't seen any videos, I'm doing 30 videos in 30 days. Hop over to Discover Fort McMurray. Please watch it. Please shop locally. There's amazing, the 30 videos are not the only 30 businesses in town. People need help. People need help, right? So we need our local business. We need to shop locally. And if you have, thank you so, so much. There's also a Christmas lights tour that I created. If you want that, you can go to my womenlights.com. You can find that. There's also a Facebook page that we created if you want to get a hold of that map as well. Anyways, Fort McMurray, thanks for watching, and we'll talk to you next time. Thanks, Barb.
Thanks. Take care.
Okay.